Mike Tedeschi, Portfolio Manager at Perspective Wealth Planning with this week's market breakdown video. This week, the market is traded in a 2.5% range, but it is traded up and down inside of that zone. Where we go next will make a big difference. I'll jump in and talk about that across all four of the major indexes. But the real story this week comes in the commodity space, especially in wheat and in oil, as they have had some explosive moves to the upside. So we're going to take a look at some bigger picture charts, talk about where we may be headed inside the commodity zone. So let's jump in and let's talk about the S&P 500. Right off the bat, we know that we ended up holding that 4,200 level on a closing basis, which was really important. We got a bounce. Currently, we still have a series of lower highs and lower lows, so we're still in that downtrend here over the last month and a half. However, we have a tight range in the context of this chart set up here over the course of this week, where we had a big move the first day and then we've traded inside that zone every day since. So where we break here makes a big difference. If we can get back up over that 4,400 level, our next real important resistance is back up at 4,600. So we're watching this zone very, very closely. This is right in the middle of the range, right? The top of the range being 4,600, middle of the range being 4,400, bottom of the range being 4,200. So what happens right here over the next session or two is actually really, really important. Let's jump in now and let's take a look at this in the context of the Nasdaq. The Nasdaq, we know, has been a leader to the downside this year. It was a leader to the upside the previous year. It's a leader to the downside this year. It held the important key 13,000 level, bounced back up, and it is trading right around that 1,400 level. Right, its important zones all the way back up here at 15,000. So you can see that it is also in the middle of this range, just a much wider range than what we've got on the S&P 500. So if we can break back up really over that 14,500 zone, we put that 15,000 level back in play. The Dow broke below that 33,000 level, but it held it on a closing basis, and that's what's important, a close. We had an ugly open, and then we bounced back up and we closed up above it. It is holding on to this support zone in at 33,000. If we're able to break over this zone, 36,000 top of the range comes back into play. So we're watching this very, very closely. Look, a lot of things are sitting right there at those key levels, and so the price action that we have over the next couple of sessions is going to be really important. Let me take a look in at the Russell. The Russell held last year's low of the year, that 1,900 level, and has bounced back up towards that 2,100 level. Right? We get back up over that 2,100 level, we're back in that important range up here, and the top end of that range is at 2,300 level, and so we're going to pay very close attention to what's going on right here as well. So as you can see from all of the major indexes, we are at a key point. We don't have clarification, right? If we fail at these zones and start to roll back down and test those lows once again, there's that old saying, the more times an area of support gets tested, the higher likelihood that it breaks. So really the bulls want to see us not test those areas again. We had especially when we're looking at the Russell, we had a low put in, we tested that low and held. We do not want to go and test it a third time. So looking for that move over 2,100 is what the bulls are really paying attention to here. Now let's jump in and let's talk about the U.S. dollar and commodities. And the U.S. dollar has been kind of that flight to safety here over the last few sessions as we continue to ramp up concern with what's going on with Russia and Ukraine. All the times that we continue to see bad pieces of news come out, the dollar gets a bit higher as kind of that safety area. We saw that same thing back in 2020. In the beginning portion of the pandemic panic, we saw the dollar fall, but then it was that flight to safety and we got that big move up. The other area of the market that tends to be that kind of flight to safety is the bond component. When we take a look in at bonds themselves, there was a very important level that we touched, and that's basically been the low that we have seen since 2019. Breakout right here, held, and we got a big bounce. Right? However, this is still in the context of a major downtrend. There's still rate raises potentially coming out of the Fed, and so usually bonds are going to go inverse to what rates are doing. So even though every time we kind of get those panic headlines, we kind of see that bid up in bonds, I'm not sure that we're going to see any sort of follow through out of here. So we're going to pay very close attention, but this is still a very messy chart. I just know I've seen a lot of people talking about what it's done here over the last couple of weeks. It's still down for the year, and it's still in the context of this much larger downtrend where we have a series of lower highs and lower lows that have been put in now over the last year or so. Other areas that we want to take a look at in the commodity space, let's go ahead and let's start with the biggest movers here, and that would, of course, be oil. Oil has had an incredible move. Now, I want to back this up and I want to look at it in on a monthly chart, right? The move that we have had so far this month, right? We're only a couple of days into the month from low to high, 22% out of oil. Going all the way back up to the 2011 high, $115 a barrel. Right, a close over 115 opens the all-time high at 147 up. All right. What's happened at the moment, we've had a huge push up into this zone, and so far we've pulled back from it. All right. Last night, I believe oil traded up to 116.5, and it's now at 109. Volatility is very high in this space, but this is the zone you want to pay attention to. If we can break over that 115.5 and hold over it, that does open some more explosive move to the upside, which is not really what anybody wants to see, especially when we also take a look at a chart of gasoline, which is trading almost at all-time high. We hit 350 last night, all-time high 363. All right. We get any more push here on gasoline, and we can continue to see this break to the upside, and there really is no upper resistance that is in play anymore at that point in time, and we are definitely going to continue to feel that at the pump if this continues. So we're paying very, very close attention to what's going on here. There's that resistance at 350, just like we've got that resistance at 115 on oil. What happens here really, really important. The other extremely explosive move that we've seen to the upside is wheat. Wheat is having an incredible month so far. It is up from the beginning of the month 20%. From where we were in the low of February, wheat is up 52%. Right? These are some absolutely massive moves to the upside. And the only other time we really can go back on this chart, which goes back to 2003, right? We had an explosive breakout in 2007, and you can see these huge monthly candles. It did calm down, and then it had one more explosive move to the upside. The all-time high, 1350 in on that, and we're at 1126. But we are clearly above this resistance zone, and there's really nothing from a price action resistance level anywhere around this point. So this continues to act very aggressively to the upside, and it has done multiple limit ups. All right, so some commodities have, and some futures contracts do not allow you to go above a certain level on a day. It's called a limit up, and that is the most that it can move. And you can see on Tuesday we reached limit up, on Wednesday we reached limit up, and on Thursday we reached limit up. So that's 3 days in a row where it has reached its maximum price expansion. So this is a very, very wild market at the moment. And it's not that way for all of the soft commodities. If you look in at corn has had a pretty decent run here over the last couple of weeks, but nowhere near the same kind of level. It's up 7% in that time frame versus 20-something percent, and it is not up anywhere close to the 50% that we have seen out of wheat. Soybeans, same kind of thing. In fact, from where it was a couple of days ago, it's actually flat. When we look at the bigger picture on this, and we back this up and look at a monthly basis, soybean is running right into those 2012 highs right here, up around that 1780 zone is acting as that resistance. And that is all for the soft commodities that I wanted to take a look at right here. The next piece that I want to jump in and take a look at is, of course, our metals. All right. We have seen gold have some wild price swings where it had a day where it went from 1980 all the way to 1880. It was a 100-point range. And if we look at the chart that we've been paying very close attention to, 1960 on a close is really the key for gold bulls, and that goes back to the beginning of last year and the end of the previous year, that resistance in at that 1960 zone. We were able to breach it in the midst of that overnight panic from Russia, but we were not able to hold over it. So gold bulls are really paying attention to that zone. What we have done since that point in time is we have held that 1900 support level. So we're really trading between that 1900 and 1960. That next move is going to be really, really important. And we've seen performance out of all of the metals at this point. When we jump in and we take a look at silver, silver's back up over 25, which is important. Next level on that we're watching is 27. We come in here and we take a look at palladium. Palladium is almost undone the entire sell-off, from 3,000 an ounce to under 1,500 an ounce, back to almost 3,000 an ounce. Just an absolute incredible round trip move, right? Scarcity. And of course, Russia being one of the largest producers in palladium has really set this in motion here as of late. Platinum is not acting nearly as well. It still needs to get up over that 1100 to 1130 zone. We keep talking about this. We keep watching this zone very, very closely. It's not over that area yet. It is still holding above that 1,000, which is a good psychological level for it to continue to hold. So we'll continue to pay close attention to it. Copper almost back up at those all-time highs that we saw here in the middle of last year. So again, we look at this in on a monthly time frame. We are trading above that 2011-2012 resistance zone. This looks like we could have a multi-month ascending triangle pattern. Right? When these break out, they typically tend to can become those explosive moves to the upside. So we are really watching this pattern play out. A close over 480 would be very big for copper. We've seen a lot of other materials. Steel names, aluminum have really ramped up here over the last week or so. Commodities have been in play now for quite some time. It's not just because the Russia-Ukraine crisis. That has, of course, accelerated things. But you can look at something like copper. Copper has been on a tear since 2020 and continues to push higher. So we had a big move in 2020, a sideways move in 2021. Can we get that follow through and that breakout to the upside? We're watching the prices of commodities across the board. It has been an area that has performed extremely well, and there are periods of time where these things run for years on end. So we're going to continue to pay very close attention to what's going on here. I hope you guys found this information useful. As always, feel free to reach out to me. I'd love to talk with you about anything related to the markets. You can reach me at mtedeschi@perspectivewealthplanning.com, or you can shoot me a phone call at 814-580-9881. Stay safe out there, guys. I will see you all next week. Take care.